back to our Mark Mobius exclusive. I've been speaking to Mark Mobius, clearly the veteran emerging market investor and, of course, a veteran on India as well. Mark, we didn't discuss Trump so far. Let's start over there. At the moment, we are seeing a lot of money being pulled out of the EM. Okay, not a lot of money, some money being pulled out of EMs. Do you think that this is going to accelerate as President-elect Trump takes over and becomes President Trump?
I don't think it's going to accelerate. We've come down roughly about 6% in terms of money drawn out from emerging markets. Very similar to what happened around the Brexit time, if you remember that. There was a time of uncertainty. I think that money is going to be coming back for a number of reasons. But first of all, Trump stands for growth of the U.S. economy. So we expect growth in the U.S. to accelerate. And secondly, I don't believe that the U.S. dollar is going to remain strong for very long. I think Trump's interest will be to have a weaker dollar so that U.S. industries can export more. So this is another area we have to watch very carefully. Even though interest rates in America will rise, this is a situation which will be very interesting for the world, because with a growing U.S. economy, there'll be a lot more money to be invested overseas, including emerging markets.
I know you wouldn't be wanting to take a bet on the point of the currency, but we've seen the dollar in a one-way street. It's now a 14-year high. If I only looked at the dollar index at close to 102, you think that it is speaking out and that 2017 actually will see the dollar below 100?
I think so. I don't know about below 100, but I don't think it's going to go very much higher than we have now, simply because Trump does not want that to happen. He will want a dollar that's competitive. And of course, all the talk about countries manipulating their currencies is coming to the fore in this administration, and there'll be a very, very close look at where the dollar stands in relation to other countries.
Well, actually, like you pointed out, Trump is seen as the president for growth, and the narrative appears to be that he's going to invest in infrastructure. Will that therefore change your pecking order in emerging markets? Will it be more pro-commodity producing emerging markets?
There's no question that commodities will be helped by the big infrastructure spending in the U.S., but not by that much, because if you look at the totality of consumption of commodities globally, China still is the king. They're the biggest consumer. The U.S. can increase, but it will not have a very big impact the way that China's had in the last 10 years.
Well, I'm coming to China in a minute, but just let me finish the Trump argument. Very recently, in the past few hours and days, President-elect Trump has made statements about stricter immigration rules and H-1B visas on which the Indian IT sector depends so much. But it's been a double-edged sword. There are some people who think that BFSI, the banking sector, actually globally will do well under Trump because of his pro-growth policies, and therefore IT could do well. Are you an IT buyer at this juncture? Do you think Indian IT is at attractive levels?
Yeah, I think the IT sector in India has been beaten down quite a lot and provides an opportunity to buy. I think Trump policies will not have a big impact on the IT sector like manufacturing exporters from India and other parts of the world might have. And by the way, the whole trade policy is up for grabs. One of the interesting aspects of the Trump administration is that there will be a lot more emphasis on bargaining at the individual country level. It will be a de-emphasis of multilateral agreements and an emphasis on bilateral agreements, which can be very good for countries like India and others who have special needs, special requirements. They can sit down with the Trump administration and reach agreement on a number of issues, and that would include IT and other areas.
Well, let me come to the other, if you please, elephant in the room, China. Are you looking at China to destabilize the world economy anytime in 2017, like we saw in Jan of 2016, or will China be a growth factor? What's the China impact on emerging markets and on global markets?
Well, as you know, China continues to grow at a very high rate for an economy of that size. if you take a number, whether it be 5, 6, or 7%, there's a lot of debate, as you know, about the actual growth rate. But even at those levels, lower levels than they were in 2010, for example, the amount of dollars being spent in the China economy is much greater than it was in 2010 and in previous years. So China will still become and will continue to be a growth factor for Asia in particular and other countries around the world. As you know, China is putting a lot of money outside. There's been a rush to get rid of RMB. As you know, the RMB has been getting weaker against the US dollar, and Chinese investors are putting their money overseas, converting them into assets and converting them into US dollars and other currencies. So I think that will continue for a while, but it's probably peaking at this stage.
Okay, well, actually, let's put all this together for the Indian investor community. Mark, in the first place, we've lost, what, 12% from the highs that we had touched, nearly 9,000 levels. We are now sitting sub 8,000. Do you think the Indian markets can go down further on a mix of Trump and demonetization in your review?
I don't think so. I think we've more or less reached the bottom, and we'll probably see recovery in the Indian market. You must remember the U.S. market is now surging ahead, and the U.S. market leads other markets, and we believe there's some correlation between what happens in the U.S. and other countries. With more and more money being made in the U.S. market, of course, fund managers and other investors will want to balance their portfolio with emerging markets investments, including India.
So, Mark, what will you add to in India, given the scenario you have painted for us in terms of fiscal stimulus, interest rate cuts, Trump's policies and Chinese growth numbers? Which are the additional sectors that you will incrementally add to in India?
Well, what we are particularly focused on and very interested in is the smaller area, the smaller company area, small and medium-sized industries that are in the consumer area, in specialized manufacturing, in pharmaceuticals, in many of these other industries which have been pretty much overlooked. And now's the time to start looking at those, because very exciting things are happening in these companies.
Okay, so it's going to be a bottom-up story for you. You earlier in the conversation mentioned banks. Would you get into, incrementally on a State Bank of India or a Punjab National Bank among the macros, probably because, they benefit from fiscal and monetary stimulus?
Exactly. The money pouring into these banks and the spread that they're enjoying should be very beneficial for their profitability. So, yeah, we look at those banks and others in the Indian economy.
Well, what about the consumption stories? We did have, the likes of Asian Paints or an HDFC Bank that services consumption, or a bunch of NBFCs like Bajaj Finance, which serve consumption. How do you play the consumption theme? Would they be consumer companies? Would they be consumer finances? What do you like in that space?
Well, I think consumer finances have maybe gone a little bit too far at this stage of the game. So I would prefer to go to the medium and smaller consumer plays, companies that are producing products that people want and will be buying at the supermarkets and other retail outlets. And of course, we must not overlook the online surge that's taking place in India and globally. And many of these online sellers will be very interesting going forward. Of course, there'll be many failures, but if we can pick the winners, it will be very, very profitable.
Will you at all play the investment theme, the Larsons of the world, because of the fiscal stimulus expectation?
Yes. I mean, if you look at the fiscal stimulus and the infrastructure spending, it would be very interesting to go into some of the construction plays. Of course, the problem, and this is not only a problem with India, but globally, going into construction companies carries many, many risks because of the kind of business they're running and the extracurricular activities they have to engage in order to get contracts, et cetera, et cetera. So we have to be very careful, but if we can find the right companies in infrastructure, they would be very, very good.
Well, there's only one sector I didn't ask you, the big oil and gas sector. Does that still hold any attraction to you? They were the 2015 plays. They haven't done much in 2016. But is there any interest all the way from Reliance to the state-owned BPCLs and the ONGCs? Anything that interests you in that space?
Well, yes. As you know, there's been quite a recovery in oil prices, even though we're still at very low levels. I still think that we might reach $60 a barrel globally, but that remains to be seen. At these prices, it's very iffy if a company is engaged in very expensive offshore drilling or any kind of high-value deep sea or deep well drilling. So I would be very careful in this area and emphasize companies that are diversified, particularly those that have a retail base, because many of these oil companies are really consumer plays rather than pure oil and gas. So that's the way I would play it.
Well, one final question to you, Mark. 2016 actually has given perhaps only 10% gains at an index level for an equity investor, but probably given 30 to 40% returns for a bond investor in India. What will be the mix in 2017? How much can an equity investor gain?
I think we could do better than 10% going forward because of what my expectation is as regards what's going to happen in the U.S. and how that will affect the global economy. So we're looking at maybe 15% or more returns if we play it right.
All right, yes, if we play it right. Mark Mobius, it's always a pleasure speaking with you. Thank you very much for joining us. Well, the key takeaway is actually pretty positive. The Trumponomics might actually play positively for emerging markets, especially for markets like India. Demonetization also could be a longer-term gain, as Mark sees it, though he doesn't think it's a very wise idea, not a well-thought-through idea. But positive on equities could make 15%. But the big point that he's making, caveat, pick your stocks carefully. This year around, it could be, that is 2017, could well be the year of carefully chosen mid-caps. That's it on this special Mark Mobius exclusive. Thank you very much for joining.